All right. Excellent. Well, I'm here with what?
I said start recording. I can see it.
That is, I think that's the world record for the quickest you've ever interrupted me. I said one, I said one word, and already you were saying something. Let me just preface this conversation here today by saying that the last time you and I spoke to each other, you were pissed off because you didn't know it was video, and you wanted to just listen, and you wanted to wear something nice. And then today, when we made very quick plans to do this podcast, you asked me if it was video, and I said yes. And you still showed up not only in a t-shirt, but in those fucking shorts. Can you please show those shorts off to everybody?
No, I'm not showing my bathing suit. I'm here in Puerto Rico. But when you said, thought, well, I have a t-shirt on because I was at the pool. And should I change? And I was like, why? What the hell? Because I didn't expect you to be dressed, and there you are in a sweatshirt. So
worlds are changing. Worlds are colliding.
Plus, it's also a Saturday afternoon, so it's not a work day, right? I'm just having a conversation.
That would have blown your mind if I showed up in a suit and a tie, and you showed up in board shorts and a t-shirt. Complete role reversal. Next thing you know, I'll be getting tattoo removal, and you'll have like a neck tattoo.
Yeah, I see all those tattoos. How many you got?
Quite a few. Here's what I want to open with, okay? First off, thank you for doing this. As always, I love you. My listeners love you. My subscribers love you, etc. But here's what I want to open with. When I had Michael Saylor on my podcast.
Oh, you had Saylor on.
Last year. When I had him on last year, the question that I closed with was, can I host a debate between you and Peter Schiff?
Did he answer?
And yes, he answered, and he said no. And he said, I really don't see a point in debating Peter Schiff because I know what he's going to say, and he knows what I'm going to say. And, I just don't want to do it. And I feel like that's the holy grail of Bitcoin debates. And I also feel like I just saw somewhere that you're going to be on stage with him. Is that right?
No. Well, first of all, it's not about what I think or what Saylor thinks. The whole point of the debate, right, is so the public can see us discussing it or arguing it with each other. That's the whole point, right? To see how we can respond to the points that the other person makes, and then people can decide, whose side they come down on. That's the whole point of the debate. But what you're referring to is I challenged Saylor to another debate, but not a Bitcoin debate, right? Gold, Bitcoin. I wanted to debate him on the premise that his entire company is a fraud, and the whole business model is a fraud, and that it's going to collapse. I mean, that's the debate I want to have with Saylor at this point. So I challenged him to that. And the reason I did that is because we're both going to be at Blockchain Week.
That's what it is.
In Dubai. And I'm already doing, a debate-ish thing with CZ. We're not going to have a moderator. We're going to have a conversation. So the two of us will be on the stage together, and we'll be discussing Bitcoin versus tokenized gold, right? And the way this happened, I was on some Bitcoin podcast talking about tokenized gold, and that I was going to eventually have a token, right? I have a website now, tgold.com, which just links to Schiff Gold, a page on Schiff Gold, where people can start buying gold and silver now and own it in anticipation of the tokenization, where people will have the option, not the requirement, but the option of withdrawing their gold in the form of a token if they want to, right? Or they can take the physical gold, or they can just sell it and take cash. But tokens will be an option, right, to withdraw. And he saw that interview, and then he put on X that tokenized gold was no good. It doesn't work because you have to trust a third party, and therefore it's not viable. And I replied to that by saying, well, that's, kind of rich coming from CZ because, he owns Binance, and you got to trust Binance, right? Binance is a third party. And I also said, the biggest thing now in the crypto space are stable coins.
Right.
And he's going to say that tokenized gold is no good, then tokenized dollars are no good. Tokenized, the whole stablecoin industry. He just threw it under the bus. And so I said, look, I disagree. Let's have a debate. Let's debate gold. I mean, a Bitcoin versus tokenized gold. And he accepted that debate and then decided to invite me to do the debate live at his event that was coming up. And I hadn't really planned on making that long trip out to Dubai, but I decided, what the hell, he's gracious enough to debate me. I'll do it on his home territory, and so I'm going to fly out there. So, but since Saylor is going to be at the same event speaking, I said, look, we're both going to be there. Let's
Right.
rumble. Let's have this conversation. Because I tried to have the organizers of that big Bitcoin conference I spoke at in Vegas in May, where Saylor was, and he was like the keynote speaker. And the organizers tried to get Saylor to debate me there, and he wouldn't do it. Even though we were both,
so he's not going to do it.
Yeah, and in fact, when he made his presentation, his main talk, he mentioned my name twice. But he still would debate me. But he wanted to, take a couple of jabs at me when he was talking negatively about gold. Meanwhile, since that conference, gold's gone straight up, and Bitcoin's, it didn't go straight down. It went up a little bit first, and then it went straight down. But gold's a lot higher now than it was in May, and Bitcoin's quite a bit lower. And MicroStrategy stock is way lower. It's one of the worst performing stocks. I guess it's in the S&P, right? So it's one of the worst performing stocks. If it's maybe the worst performing, I don't know. But I know it's down 65% from its peak, and there's no bottom in sight.
Yeah, I think that, look, he's come on my podcast. He invited me to his New Year's Eve party, I think last year in Miami, or at least his assistant. At least I was on the email list that his assistant has. That was
coming up this New Year's Eve?
Last year.
Oh.
He invited me to his New Year's Eve party in Miami. Of course, I didn't go. But I think that he knows that I can be respectful to him and take his point of view, and that also I'm open to the idea of Bitcoin. And I think that that I can be a respectful arbiter, and I would love to host that debate, but he won't do it. I mean, I would donate $10,000 to St. Jude's in his name to host that debate. That's how much I would like.
A lot of people would want to host it.
That's the holy grail of Bitcoin debates. And I also think at some point, I understand his point of, I know what Peter Schiff's going to say, because you've done a million debates. And so I know what your arguments are. I've listened to all of them, and I know what he's going to say too. I feel like I understand the case for and the case against Bitcoin. So I kind of get it, but also at some point down the line, it kind of it's almost as though if things continue in the direction they're going, I think he has to do it, because
more of it is just, it's not so much that what we're going to say. I'd like him to say some of the ridiculous things that I hear him say, and then reply to it and have him answer my critique. Right. I hear him interviewed all the time. Like I was just listening to him. He was Fox or CNBC. But he said, look, I got enough money to pay. I can pay the dividends and strategy for another 70 years.
Yeah, he said, if the price stays where it is now. That's what he said first.
Well, I mean, what kind of crazy talk is that? Because then he said, if Bitcoin if goes down 90%, he said strategy is going to be fine. Like he said, even a 90% decline. I'm like, okay, so you're telling me that your stock price, because if Bitcoin goes down 90%, strategy is going down at least 90%. How is that? How is that fine? Like your shareholders are going to be fine with that? And if Bitcoin goes down, down 90%, and it's back below 10,000. How many people are going to want to buy a Bitcoin treasury company that's levered up? Not that many. So it's going to be trading at a huge discount. I mean, for him to say that he's fine, that the company is fine, even if Bitcoin goes down 90%, that's ridiculous. The company won't exist anymore if Bitcoin goes down 90%.
Well, and there's a lot of arguments that he makes that make perfect sense in the vacuum of the idea that Bitcoin is going to go up in perpetuity, right? So like you can keep adding different types of preferred stock. You can keep paying dividends. You can keep issuing converts as long as there's demand and while you're trading at a premium. There's a lot of things that exist in the vacuum of a perpetually rising price that make a lot of sense. But that dynamic changes, and Bitcoin doesn't have to go to zero. It just has to be drawn down considerably. Like I still think there's a case where MicroStrategy gets put under severe distress and winds up having to liquidate, but Bitcoin makes it over the course of the long term. Like that's a possibility. So they're not mutually exclusive.
No, I would agree that MicroStrategy could get liquidated and all these Bitcoin treasury companies could get liquidated and Bitcoin could be substantially lower than it is now. And it could come back at some point in the future. I don't know. I mean, I think that if there's a role for Bitcoin at all, it may exist at a much lower price point than it exists right now. I don't think that it's ever going to achieve the objectives. I think it's ironic that, if something comes out of blockchain, it may be more like tokenized gold. I think that blockchain does a lot more for gold by making it more liquid, more portable, more divisible, making it better money than it's been in the past. So it's, again, that's a little bit ironic because a lot of people thought that, Bitcoin and blockchain would be the death of gold. Instead, it could help give it a whole new lease on life as far as improving its efficiencies as money. But, I don't see to say that, well, strategy works so long as the price of Bitcoin only goes up. That's what people used to tell me about the housing market before the '08 crisis. When I was telling people how the banks were going to blow up and how Fannie and Freddie was going to blow up, the reason that they didn't believe me was because they said, well, housing prices would have to come down, and that's never happened before. And so we don't have to worry about that. And I was like, well, that's exactly what you have to worry about, because to say that housing prices are never going to come down on a national level, that's just ridiculous, especially when you look at how high they are right now. To expect that they're not going to come down. And if you don't understand the reason that they got so high, you don't understand the mortgage market and how it's, how all that credit that was funneled into housing inflated the bubble. If you don't understand that, because if you recognize there's a housing bubble, it's going to pop. I mean,
right.
The nature of bubbles. And Bitcoin, to me, is the biggest bubble I've ever seen. Because at least you can live in a house. You can rent out a house. I mean, it's got some utility. The same thing with tulips, right? I mean, you can still look at it and smell it, right? It didn't, justify the price. But Bitcoin, I think, is the biggest bubble because I think there's really no substance at all there. And which is why, Bitcoin is, the first of the risk assets to really fall. Maybe it was a leading indicator of what's now happening in AI and tech, but because it's the weakest link in the risk asset chain, because it's nothing but risk. At least there's something beneath at the heart of the AI bubble. I think there is a bubble in AI stocks, and I think we're spending a lot too much money. I mean, more money than we actually have. Even though maybe these expenditures will be worth it, I don't know. I mean, who knows how AI is going to develop? But where is all this money coming from that is funding all this investment? I mean, what are we not doing? What is getting starved for capital so that we can feed the AI, right? And how is that going to show up in the economy? Because we don't have an unlimited amount of resources, right? They're finite. Right. And if we're going to invest capital in AI, it's got to come out of something. So, and we're going to find out, like,
comes out of a printer, Peter. Comes out of a printer.
Well, then it's just massive inflation, right? So prices go way up.
I just want to read something to you real quick because I found this noteworthy. And again, I think people that have taken the time to understand what my kind of nuanced stance on Bitcoin is, and why I'm long a little bit of Bitcoin and why I hope that it makes it. I think they understand that I don't have to be balls out, euphoric and completely detach my brain from my head in order to hope that it continues to go up and hope that it does kind of wedge its way into history as the years continue. But I do also, I think I take probably a more skeptical look at it than most people, because that's what 10 years of being a short seller will do and having a grasp on Austrian economics will do. But the one thing that Bitcoin does rely on, that anybody will tell you, whether it's Saylor or me or anybody that's long, is it does rely on adoption. It relies on the network growing, not only the network growing, but the protocol kind of growing in prominence. You have a lot of bulls, even like Jack Dorsey, have said like it does at some point need to become a standard for payments also too. You always say you'll agree that it has won when things are priced in Bitcoin. But just going back to the growing adoption part of it, certainly we've seen this huge ramp up in adoption with the current administration. But Van Eck, the company that has all of the ETFs, their CEO was on CNBC on Friday. And this is really the last, 2 years, Peter, all I've seen are institutions and people of bigger and bigger prominence, most recently Fidelity, JP Morgan, kind of capitulating and saying, okay, we're letting Bitcoin in. Even Diamond, who said at one point, Vanguard did this also too, right? Vanguard was, we're not going to touch it. Now all of a sudden, okay, we're letting Bitcoin in. This is the first, at least prominent public figure I've seen hedge in the last year or two. This reads, Van Eck's CEO has put new pressure on Bitcoin's long-term security, saying the firm would reconsider its position if quantum risks weaken Bitcoin's core thesis. And he said on CNBC, we will walk away from Bitcoin if we think the thesis is fundamentally broken. And he also said it's, people are saying, okay, he was on CNBC to pump Zcash, which is a different token. But just to hear that publicly, I think it's not a mistake that we're hearing that after a 20 or 30% drawdown. And I just wonder how things would spiral if maybe Bitcoin lost another 50, 75%, because the bulls will say, like my buddy Larry Lepard, who you debated and who I love, he'll say, hey, this is nothing. We rode down 490. We've ridden down 490% drawdowns, and they have a good point, right? They have a good point, which is it's drawn down 90%, and every time it makes a new high, including when you, Peter, say it's not getting over 90, it's not getting over 100,000, whatever. But now you have this guy making this comment. So what do you think?
Well, you got a lot of points in there that I have to unpack, so it's take me a while. But
take your time.
Getting back to the whole thesis about adoption, right? That there's more adoption. Okay, nobody's actually adopting Bitcoin. Like they're not using it as a payment mechanism instead of like PayPal or Venmo.
Well, they're adopting it as a store of value.
No, they're not adopting it as a store of value either. Nobody is buying Bitcoin to store what they've got. Right?
That's not true. That's why I own some.
Yeah. People are buying Bitcoin because they're being told they're going to get rich. They think it's going to go way up. They're not just saying buy Bitcoin and it's going to stay sideways and like keep up with inflation, right? That's not why people.
No, they're buying it as a hedge against inflation.
No, they're buying it because they think it's going to go to 1 million, right? They've been pushed into thinking it's the greatest asset ever. It's going to only go up. You're going to get rich if you buy it. You're going to stay poor if you don't. That is the whole philosophy. There may be a small number of people that are buying it as a.
Let me just stop you. Let me stop you real quick, because the reason that I own some, right, is not because I'm a fucking moron that wants to get duped and because I'm trying to get rich off of it. The reason I own a little bit is because I think there is a thesis Not saying that it's right or wrong, but I think there is a thesis that eventually central banks around the world may use it as some type of
Yes.
hedge, and
Well,
and because of its peer-to-peer nature, hang on, because of the nature that it's peer-to-peer, if the people decide that they want to hold it as a hedge against money printing and a hedge against fiat, that they have the power to do that, because that's what the decentralized nature of the network allows them to do, and the protocol.
there are some people that are holding it for that reason, but I would say that
That's better.
to the extent that your real purpose is just a hedge against inflation, you would own gold. I mean, gold is a much better proven hedge. It's been around for a long time.
I agree.
So if you're just looking for stability and safety, you would buy gold. Or, if you wanted it in the form of a token, you'd buy tokenized gold. But if you didn't want to take possession, instead of buying a Bitcoin ETF, you would buy a gold ETF. So my point is that the people who are buying Bitcoin and not gold, they're not buying Bitcoin because they expect stability. They really think they're going to get rich in Bitcoin, right? It's all about going to the moon and these pie in the sky forecasts. Michael Saylor is like $10 million of Bitcoin, so, everybody, I mean, Kathy Wood, she just reduced her 5-year forecast from 1.5 million of Bitcoin to 1.2 million. But still, that's more than 10x, right? Nobody says that gold is going to be 10 times higher, in 4 or 5 years. I mean, I don't go out and saying that 5 years from now, gold's going to be $40,000. I mean, it could be if we have, hyper.
That's just not true. Yeah, but that's just not true, because I have talked to you. I have had conversations with you with gold at $2,000 an ounce, where we are talking about $20,000 an ounce.
Yeah,
and I've had conversations with other gold bulls.
4 years. I'm not saying it's going to go up there in 4 years. And when I
we've had conversations that are damn close to what you just said. So that I think you're wrong.
Yeah, but that is predicated, no, and it's also predicated on a dollar crisis where the price of everything else goes up a lot. I mean, gold.
Right, and Bitcoin is included in the everything else category, though, right?
I don't know about Bitcoin, but when these people are talking about Bitcoin, they're not talking about it in that context, right? They say Bitcoin is going to take the whole market cap of gold, which is completely asinine. But anyway, let me get back to the points that you made.
But you're right there. You're right there, because hold on one sec. Because you're right that Bitcoin is the tip of the risk on speculation spear. That I agree with you on, right? And so when you say, like, I make this argument about gold that, you just said a second ago that you did make, and then you go to justify it and you say, because it's a hedge against inflation and everything else is going to go up.
And Saylor is 10 million. Bitcoin is 80,000, and he's saying it's going to 10 million. But look, forget about this. I want to get back to the points that you made before I forget what they were.
Okay.
But anyway,
I want to argue today.
It's not adoption, really. People aren't adopting it to use it. You have more people that are speculating in it than you had before, right? More people are in the Bitcoin casino than were in that casino before. And that's why Wall Street wants in on the action, right? They see all these gamblers, and they want the gamblers at their casino. They want to be raking the pot, right? As opposed to somebody else. So it's not that Wall Street now believes the Bitcoin thesis or thinks this is real. They don't give a damn. All they see is a lot of people who will pay them commissions to trade it, right? And so they want to open up their doors. They want a piece of the action. And also, Wall Street is making a lot of money now underwriting companies, Bitcoin treasury companies, Bitcoin exchanges, Bitcoin miners. I mean, they're making a fortune off of Saylor and all the new stock he's issuing. So everybody wants a piece of that. Everyone wants to get paid. Nobody cares, like, what happens to the gamblers. I mean, most of them probably know they're going to lose their money, but the casinos don't shut down because their customers are going to lose money. That's why they're in business, because their customers are going to lose money, they're making money. And so that's what's going on with Wall Street. And the reason that Bitcoin has to continue to expand the gamblers, right, is that's the nature of the beast. it is a pyramid. It's a Ponzi, right? And the only way it can work is if you have more people coming in, because that's the only way that the earlier people can get out, right? The only way that somebody who bought Bitcoin a long time ago can sell it at a high price is if some new person comes along and buys it from him at that high price. But now that buyer, the only way he can get out is if somebody else comes along later than him and pays an even higher price than he did. And the reason that pyramids or Ponzi schemes are illegal is because eventually it falls apart, right? There is no way to ensure an ever increasing supply of greater fools. And so the question is, when are we going to run out? And to me, I think when the government finally got involved, that was probably the end of it. I mean, first I thought it was Wall Street getting involved, right? I thought when all the ETFs came out and all this, that was it. That was the OGs cashing out, and now mom and pop retail investor were just buying a pig in a poke, right? They were being sold as trash, and they were buying it, and that was it. But then they got Trump, right? They were able to buy Trump, put him in office, and now get another wave of people coming in based on all the hype that surrounded Donald Trump winning. Because I think a lot of people bought into Bitcoin because they said, oh, well, now if the government is behind it, the government's got a strategic Bitcoin reserve, Donald Trump's going to make America the Bitcoin capital of the world. Hell, I got to buy it, right? Because how can I lose, right? They're going to just drive it up. The Trump's whole family now. That's the family business. I want to go in business with Trump. He's going to pursue policies that benefit his family. I want to benefit too. I want to be whatever he's in, right? It's like, he's the insider. I'm going to follow his buying pattern. So I think this now brought in another round of fools that have bought in. But I've been commenting on this all year that despite all this hype, Bitcoin didn't go up. And now it's finally coming down. And the big problem it's going to have is the resumption of the gold bull market. And I've been talking about this. I talked about it on my podcast yesterday at Schiff, that the environment in which Bitcoin flourished with its digital gold narrative was 2011, although most people didn't go back then. But up until 2024, we had a 12, 13-year period where gold was in a trading range.
Right.
And people were getting frustrated with gold because they bought it. They didn't own it from 300 to 1900. They missed that. But they got in, sometime along the way, 2012, 2013, 2014, 2015, and it didn't go anywhere. Meanwhile, Bitcoin came out of nowhere and just went ballistic.
Right.
And everybody's talking about how much money they're making in Bitcoin, and you're not making anything in gold because Bitcoin is the new gold. It's gold 2.0. Gold.
And people don't understand the fallacy of using like a compounded annual growth rate that starts in 2011 when it was at 6 cents, and then coming out and saying, well, on average, it's earned 50% per year.
Yeah,
it's like, all right.
Look, if Bitcoin falls to 10,000 next year, you can still argue that it's the best performing asset since inception. But what does that do for the people that didn't buy it when it was initially conceived, but they bought it at 100,000 and they're down 90%, and then you're trying to tell them, but it's the best performing asset since 2011. I mean, that's not a consolation to somebody that's just lost 90% of their money. But that actually brings me back to something else I wanted to address. The point that you make is, yes, people who have been in Bitcoin for a long time have experienced many swings where Bitcoin collapsed and then came back to life, right? And because Bitcoin has done this so many times, there's a sense of, well, it's going to do it forever, right? That every time it comes down, it's guaranteed to go back up.
Right.
The problem is it's not, right? One of these times it's going to go down and not come back, except you don't know for sure when that is. And I think a lot of people, let's say this was the peak, and I don't know, let's say this was the peak and it's never going to get above 126,000. When do you give up hope right? 5 years from now, if it's still lower, do you still think, well, it's going to do it? I don't know. You don't know when, to fold your hand here and think, okay, it's done. But just because it's happened in the past doesn't mean it's going to happen again. Especially, I've heard the argument, and I actually just posted something about this on X, and it made sense to me that people are saying, well, this is like the IPO moment for Bitcoin. All the OGs that have been holding for 12 years, whatever, they finally have enough liquidity to cash out. And if that is the case, if all this Bitcoin that was not really part of the float, that was just hodled, in storage, right? If all that now is part of the float, and we're moving it from the strong hands that held it to very weak speculative hands that are buying it now, right? The dynamic is very different. All of this Bitcoin is going to be on the market. And I think the other thing that's changed is all of the people that own Bitcoin in ETFs. I don't think the vast majority of these people are, true believers in the story. I think they just own it. It's a symbol that was going up, and they were hyped into it. And, they clicked it on their mouse or whatever, and they bought it on their computer, and they added it to their account. And I think at some point, the ETF investors are going to bail. They're just going to say, you know what? Didn't work out the way I thought. I expected it to go way up. It's not working. I'm taking my chips and I'm putting them someplace else, right? I think that's going to happen. We didn't have that dynamic in the big drop in 2013 or 2017 or even 2020. Also, all of these Bitcoin treasury companies that have bought up Bitcoin just to hold it. And I think this is a passing fad, or it's a pyramid on a Ponzi. I mean, the whole story behind a Bitcoin treasury company doesn't even make any sense. I mean, as a viable business. I mean, think about it. So the business of a Bitcoin treasury company is it goes out and buys Bitcoin. Well, why do you need that? What value do they add? The only value they supposedly added was, the minute we have a Bitcoin treasury company, the market's going to value it at this huge premium to its non-income producing Bitcoin, which will allow us to sell stock and then buy Bitcoin with the stock, and we get more Bitcoin than the price of the stock. But that assumes that these companies are always going to trade at premiums. But anybody who's got any experience investing knows that a lot of times funds go from a premium to a discount, right? We remember that with Grayscale Bitcoin Trust. That's a perfect example of how something could blow up like that. But once people realize that these Bitcoin treasury companies are just a scam, they're all going to trade at discounts to their Bitcoin. Now you can argue, well, then they're a good value, right? Because I could buy $1 worth of Bitcoin for 80 cents. But the discount could get bigger and bigger and bigger, especially if these companies are levering up and borrowing money and have operating expenses to operate non-viable businesses. So I think all these companies are going to go out of business, and that means they're going to be dumping their Bitcoin.
And the problem is, real quick.
Well, hold on, let me finish one thing, because I'll be first. Bitcoin flourished in the environment where gold wasn't going anywhere. So Bitcoin was able to steal the limelight. Gold was like, who cares? Gold has doubled now in the last 2 years. It's broken out of that consolidation. It's headed much higher, I think. Central bank buying is going to continue and expand. Retail investors are coming in now, just starting. Institutions, Morgan Stanley saying, hey, let's make the 60-40 portfolio. Let's cut the bond allocation in half, sell half your treasuries and buy gold, right? They didn't say put half in Bitcoin, right? So it's gold. Now that gold is performing and Bitcoin is not, gold's up 50% this year, Bitcoin's down 10%. There's no argument anymore that you need Bitcoin because gold's not performing. And if all you've got is zoom out, right? Well, for the last 4 years, gold has way outperformed Bitcoin. So what are you going to do? I mean, just keep telling people to look to the past during times where they didn't even own any Bitcoin. and say, well, look how well it's done. Yeah, every bubble, you can make that argument, where they were when they started. Again, if Bitcoin goes to 1,000, it's still the best performing investment since it was a penny. So what difference does any of that make to the people that paid $100,000 or $50,000 or $10,000 if it's at 1,000? So I think that that zoom out crap, how great Bitcoin is, that's not going to fly. And then once Bitcoin doesn't have that, then what has it got? That's the whole selling point. That's the whole meme, right? It's digital gold. Well, it's not digital gold. You know what's digital gold? Tokenized gold. Actual gold is digital gold. That's what I'm going to have, and other people have those tokens. But if you own a token, let's say T Gold, you own gold. The token is simply a representation of that ownership. It's like the title to your car, right? And now you have a digital title to gold that entitles you to go take the gold, or you can send a portion of it to somebody else. So if I own some gold and I owe you, $100, I can send you $100 worth of my gold, and now you own that gold. You now own the title in the token, which gives you the right to come to me and get your gold. Or you could give it to somebody else who now has the right. Nobody ever has to exercise their right. They could just leave the gold sitting there. But if a jeweler happens to get your token, he may go and say, oh, sure, I need some gold. Yeah, let me go get it. I'll cash in my token because I need to make some jewelry, right? Because that is the main difference between a Bitcoin and gold and why it's a store of value. There is an actual user, and the Bitcoin community likes to poo-poo the fact that gold is used in jewelry. I just mentioned to you, before that I was watching the president and Mandami in the Oval Office, and right next to the Resolute desk, I could see this big gold statue, of the American eagle on the Constitution, and I know that that's plated in gold, and you didn't plate it in Bitcoin. In fact, when he got, Apple gave him a trophy on a gold base, solid gold base, right? So gold has an actual use, like silver. I got that same statue that Trump has. I have it in pure silver, right? So precious metals can be made into decorative things, but gold is used in all sorts of things.
And if you want that to hit home, because that argument does often get laughed at, right? People will be like, what is it used in dentistry? Is it used in jewelry? Like, listen, I was at the Met last weekend, okay? And they have an ancient Egypt exhibit at the Met, all right? So ancient Egypt, you're talking 3,000 years ago. And there's one case in one of the showrooms in the Met where they're showing off jewelry that the Egyptian women or men, I don't know, were wearing back, 3,000 years ago from today. And what I said to the person I was there with, when I saw it, I saw a bracelet made out of pure gold in the shape of a snake. And what I said to the person was, this looks just like a bracelet that I saw one of my friends wearing, just maybe 6 months ago. It was almost identical. And the fact that one was being worn today and was made out of solid pure gold and looked that way, and the other one had been obviously probably polished a little bit, but essentially was the same exact thing from 3,000 years ago, right there, that's enough of an argument for what you need for every person that laughs and said, oh, what are you going to use it in jewelry? It's like, motherfucker, they were using this stuff 3,000 years ago to make the jewelry. Like, that is even you want to put aside a store of value and put aside talking about all of the great properties of gold and all those things. Like, how about just a 3,000 year track record as being jewelry? Like, that's enough to maybe suggest, all right, it'll probably make it as jewelry for another 100 years at least. But let me move on.
But the other thing, though, that's interesting about that bracelet, not that you would melt it down because it has value because it's 3,000 years old and it's gained value as a collector's item. But if you melt that gold down, it's exactly the way it was when they cast that bracelet. And you could take that gold and you can make a brand new bracelet, or you can, use it in computer chips. You could use it in aerospace. It's exactly the way it was. I mean, whatever else they had buried 3,000 years ago probably is dust now.
Right.
I mean, there's not much left that from 3,000 years ago except the gold. That just shows you the properties that it has, how timeless. I mean, gold's going to be here after we're all dead, and after our children and our grandchildren. Bitcoin probably won't even survive me.
All right. So let me just go back to what you were saying before, because the one thing that doesn't make sense to me about Bitcoin and about MicroStrategy specifically is when you start doing and saying things that, in my mind, run completely counterintuitive to what us Austrians believe are the basic, tenets of economic law. So to go back a couple of years when you were debating Alex Mashinsky from Celsius, which then went bankrupt, and he, of course, was indicted. But in that interview, he said some really stupid, outright false things, like gold has no value and Bitcoin pays a yield. Both of those things you and I identified immediately.
Well,
hold on. Let me finish. Let me finish my thought process and my question. We identified those things immediately as being wholly incorrect and just not objectively not factual. And what I'm seeing with strategy now, with the issuance of preferred and the issuance of a different type of preferred, and then now having to keep up with paying a dividend and throwing out this idea of Bitcoin, there being a Bitcoin yield, making a yield off of Bitcoin. The idea just doesn't, at some point, like you said to Mashinsky, the yield has to come from somewhere. Bitcoin sitting alone in a room doesn't generate any yield.
So first of all, Mashinsky said that gold paid a yield too on his platform.
Right.
And I said, okay, well, how? I said, what are you doing? Because the gold just sitting there doesn't generate any income. I mean, you can generate a yield on gold, but you have to loan it out to somebody, right?
Right. Same with Bitcoin.
Yeah, but then you take a counterparty risk, because what if they don't pay you back? So I'd have to know, like, okay, what is the mechanism that but he couldn't tell me. He was just saying, I just pay a yield. It just does. I'm like, well, you can't unless you're a Ponzi. And he had the same thing with Bitcoin, which is why I made the Bernie Madoff reference when he said he's got such a great opportunity. And I said, yeah, so did Bernie Madoff. And you're singing the same song. But getting the Saylor, these whole preferreds are a complete fraud, because they promise an 8% or a 10% yield, depending on which preferred you're buying. But MicroStrategy doesn't earn any income. In fact, it's operating at a loss, even with the software business.
Well, its legacy business, right, generates cash.
Yeah, but it loses money on top of that from the rest. It's a net operating loss, right? Its income is a fiction. It's just marking to market the Bitcoin, which obviously this year they're going to have huge losses if they probably won't report them as losses the way they reported it as income. But so the only way that they can pay any interest, assuming that the payment is in cash, is if they borrow it, or they have to sell more stock in order to, they have to sell more preferreds to pay the interest on the existing preferreds, which is a classic Ponzi. That's the whole nature of it. But a lot of the preferreds, they don't even pay cash. You get the dividend in strategy stock. So if you want cash, you have to then sell your strategy stock into the market. So it means that there's going to be a constant increase in the supply of strategy stock in order to pay the dividend. But of course, he can stop paying the dividend whenever he wants. If you look at the terms, the dividends are only due if strategy declares them. And if they don't declare them, then you don't get it, and they don't accumulate. It's like if he doesn't declare them for a few years and then they do, you don't get, whatever's missed is lost forever. But I think when people realize that this whole thing is a con, because the main buyers of the strategy preferred are these income-oriented funds that are like, oh, I'm getting an 8% preferred at 10. That's going to really help my yield, right? They're buying this crap because, of course, it's not even their money. So what do they care? They just want to put it in the portfolio to increase their yield. when they realize there is no yield, that the yield goes away, then the preferreds are going to get sold. The market's going to crash. I mean, there's no reason to buy these things. I mean, because in theory they're worthless because you don't have any real equity stake in the business. You just have the equivalent of a bond, but you don't have to get paid and it never matures. The whole thing is really a scam. The only thing that you've got is a preferential a part in the credit structure at bankruptcy. So if strategy goes bankrupt or when they go bankrupt, after bondholders are paid, right, convertible preferred holders are paid, then if there's anything left over, the convertible stock guys will get money. They're ahead of the common. But the other thing is, the only way that they can pay a dividend on the common is if they pay a dividend on the preferred. But they'll probably never pay a dividend on a common. Why are they going to pay a dividend? They don't have any income to pay dividends out of.
Well, let's just and let me just say something real quick because I don't want to get sued, but like
by who?
By Saylor or by MicroStrategy, because if
I call him a commie. He's not going to sue. Let him sue me.
Hey, I have a commitment to the truth here, okay? And so I want to just note that I pulled up their 10Q and that technically they posted positive net income, though it is from the majority of it is from the unrealized gain on digital assets. However,
that is income. That's
I'm just telling you, their P&L counts that as net income. And so I just want to be on the record, which I understand your point. I'm just saying I don't want somebody to take that fucking P&L and be like, you said they're on top of that, a loss-making business, when technically their financials are not showing them as a loss-making business. That's all I wanted to say.
Yeah, but they haven't realized any gains. It's just they're just counting the paper gains on a speculative asset. That's not the same thing as operating income. It doesn't recur, right? When you're looking at income and you're looking
that's correct. It's not operating income.
You're looking at their ability to pay their debts, right, or make dividend payments. You need consistent, predictable earnings to say, oh, look at our earnings. Look at the losses that they're going to post this year. Massive losses, right? If that's the criteria. Now, I'm sure strategy is not going to post it as a loss. They're probably going to say, well, we don't count that. That's just the fluctuation in the market, right? It's going to be heads I win, tails you lose. Because even if you look, I pull up my on my computer, when I pull up strategy, it shows it like at 2 or 3 times earnings, like this really low PE, like it's some kind of value stock, because it's, they're counting, what you shouldn't count. I mean, even what's the song, never count your chips while you're sitting at the table, right? There'll be plenty of time for counting when the dealing's done.
But
right?
allowed under GAAP now, so it's technically okay.
Really? GAAP allows you to mark.
They changed. I think they changed the accounting treatment for Bitcoin, because when you look at the year prior P&L, it's not in there. And so I think as a result of the accounting change, that's why they're able to post this unrealized gain on digital assets. It's in the cash flow statement too.
Are they going to have to post the loss on the way down?
Yeah, I would hope so. Yeah. I mean, they have it as a line item. So
then here's what's so ridiculous, right? It goes way down one year, then up, then down, then up, then down. Losses, gains. But the whole thing's a fiction because they haven't really made anything, because all they're doing, even if let's say they lose $30 billion this year, right? And then next year they gain $5 billion of it back. Did they really have $5 billion of income? No, they don't. They just reduced their loss from the prior year. But you shouldn't even look at it.
A better statement would be their net cash used in operating activities was a loss of $45.6 million for the 9 months ended this past quarter. So if you look at the cash flow statement, it shows what you're talking about. I'm just saying on the P&L, it didn't gel with your point, and I just don't want it to.
Well, that's what counts. Look, I don't know what the criteria is. I could create my own token, right? Peter Schiff token. I can have a buddy of mine buy it. I can create 1 billion of them and then have one of them trade for $1. And now I have $1 billion. And I'm going to claim that as my income. because I have $1 billion worth of Peter Schiff coins. It's like, but that could technically be, but I can't realize it. I found one person to pay me $1 for a token. I'm not going to find 1 million that'll pay me, or whatever it is. So that's part of the fraud, to claim all those earnings as if they were earnings. I mean, if you want to say, look, we have unrealized paper gains, but that's the other problem with Saylor. I mean, right now he only has about a 10% gain, right? Bitcoin is 84,000,
right?
And his average cost, he's been buying Bitcoin for 5 years. His average cost is almost 75,000. And so he's up like a little over 10%. I mean, he'd be better off if he bought anything else other than Bitcoin. That's about the worst thing he could have bought, right? Every time Saylor, clicked the buy button on Bitcoin, had he just bought gold or silver, he'd be way better off. Had he bought the S&P 500, had he bought the NASDAQ, right?
It makes sense if you believe it's going to keep going up.
Well, all right. Well, but it hasn't. It's right. I'm talking about where it is right now, right? So you got to live in the here and now, and if he tried to sell, that is the other big difference. Yes, I can claim he's got this 10% profit on paper. Let's see what he can realize, because the minute Saylor starts to sell, that's it. I mean, the market is gone. I mean, he is the biggest buyer. I've made this joke a couple of times. I don't know if you heard it about the Eggman. Did you ever hear that joke?
No.
I don't know. I don't forget who told it to me a long time ago. But so there's this guy, and he calls up his broker, and he wants to buy some egg contracts. And so he buys, 1,000 contracts. I don't know, and maybe they're 20 cents. Buys these egg contracts, and then comes back. He calls his broker. Hey, how are the egg contracts doing? He's like, oh, they're up at 30 cents. Oh, buy me 10,000 contracts. It's going up. Okay, you bought them. And he calls back, calls his broker. What's happening with the egg market? Oh, the futures are up to 40 cents now. Oh, my God, I doubled my money. Buy me 1 million contracts, whatever. 100, And he keeps buying these egg contracts. And then he calls his broker up, and it's like, how are the eggs doing? We're up to $1. He's like, oh, my God, $1. Let's sell. And the broker says, Sell to who? You're the egg man.
Right. Yeah.
It's like, and that reminded me of Saylor. He's the egg man with Bitcoin. He's the buyer. It's like when he wants to get out. And a lot of the buying is based on the fact that people know he's going to buy. So they want to buy too.
Right.
It's not just, his buying. It's the other people that buy because he's buying. And, all these other Bitcoin treasury companies, they're just following Saylor's lead. He's the Pied Piper, right? They want to do it because he did it. And he's got all this money, because he did it. But of course, that's the other thing that people miss is when Saylor was the only game in town when it came to Bitcoin treasury companies, all right, I guess something. But when you got dozens of these things, now they're all competing with each other for the same money. That's the same thing with Bitcoin. When people say, well, Bitcoin is scarce. Well, in theory, it's scarce, because it was, designed to be scarce. But it's not the only cryptocurrency out there. Bitcoin competes with Ethereum or all these other meme coins or, Dogecoin or Fart Coin or tens of thousands of coins. And it competes with, all kinds of now crypto-related businesses. There's lots of places. If I want to invest in crypto, I got a lot to choose from. It's not like it's just Bitcoin, so there's all this stuff. And my other argument too about the scarcity of Bitcoin, I mean, Bitcoin, there's 21 million Bitcoin. So it sounds like it's scarce. Oh, there's only 21 million. Yeah, but there's 2.1 quadrillion Satoshis. So when you talk about Satoshis, it's not scarce, right? There's enough for every person on this planet to have hundreds of thousands of these things. So there's no scarcity there. I mean, there's plenty of Satoshis to go around. There's no reason that anybody needs to buy 100,000 of them, 100 million of them rather, so they can have a whole Bitcoin, right? You don't need it. Now, people always say, yeah, but Peter, the same thing is true with gold, right? You can take an ounce of gold and you can break it down into microscopic particles maybe. But, what is a little microscopic speck of gold worth to a jeweler? Nothing. He can't do anything with it. He's probably going to lose it. It's so tiny. With gold, you need a certain quantity to do whatever it is you want it to do. And so therefore, there's demand for particular quantities. You don't need any particular quantities, right? If I have 100,000 Satoshis, I got plenty of Satoshis. I can do all kinds of things with them, right? Which is, I can trade them. I can't do anything with them, but I can trade. I don't need a Bitcoin. And so in that sense, the scarcity is just manufactured hype. There's plenty of Satoshis, because what if they just said, there's nothing that says they can't redefine Bitcoin and say, look, Bitcoin isn't 100 million Satoshis, it's 10 million Satoshis. Nothing changes, but now all of a sudden there's 210 million Bitcoin. Does that mean it's not as scarce, right? So the number means nothing.
Well, the nature of the protocol is that, Bitcoin as it exists is always going to be just what Bitcoin is, and everything else is a fork off of the original Bitcoin. And that's the argument about that's the intrinsic value argument, that Bitcoin is one of one, and no matter how many other cryptocurrencies you come up with, or how many times you improve it, or how many times you try to fork off of it, the protocol is the protocol, and it will be the only one because it is the only one.
Yeah, and if there are more people that come into the cult of Bitcoin that want to worship it and Satoshi and say, we don't want any of these other ones that came later, even if they're better, even if they're faster, even if they're more secure or whatever, we just want the original because we are loyal and faithful to our God, right? We're going to worship this Bitcoin. Yeah, I just don't know, that cult's going to continue to grow and get more and more members, because that's what's required.
Right.
But at the end of the day, right, whoever is remaining in the cult of Bitcoin, these people still want to buy things. Right. They need to buy things. And so they're going to have to sell their Bitcoin at some point. And so unless they just sell it to each other, but at some point, they want out because they want to buy. They want to buy a car. They want to buy a house. They want to take a vacation. And in fact, what's going to happen to some of these Bitcoiners, because a number of people, because I've seen the advertisements for these companies, I've seen them interviewed, people were posting their Bitcoin as collateral, and then they were getting, no questions asked loans, like no credit checks, nothing, just asset-based loan on your Bitcoin. Hey, put up $100,000 worth of Bitcoin, and we'll wire you 50 grand. People did that. Those people are about to lose all their Bitcoin, and they didn't want to sell it because they didn't want to pay the taxes. Well, now they're going to sell it and they're going to pay the taxes. They're just going to get a lot less. But because they probably spent the money already, they may even not have enough money left over to pay the taxes. They may be broke and owe the IRS money because they don't have the money to tax, because they spent that money on a car or whatever they did with it. So yeah, and a lot of them didn't want to sell because they didn't want to get out. They thought Bitcoin's going to keep going up, but I need a new car, but I don't want to sell my Bitcoin to buy that car, so I'll just borrow against my Bitcoin. Well, they're going to end up selling it, but at a much lower price. Because they didn't think that was going to happen, because they were so sure that Bitcoin was going to the moon and that it would be impossible for it to go down to a level where they would get a margin call.
Right.
But that's what happened.
Can I ask you, I want to wrap it up, but I have a last question that I want to ask you, which is kind of more of a philosophical question, and one that I really genuinely want to ask you as a friend, as opposed to just, asking for my subscribers or whatever. And I'll just give you some context. One of the things that I struggle with a lot is I struggle with the idea of constantly preaching about, or not preaching, but constantly, looking at the markets and the economy through the Austrian lens, through the, traditional economic lens, where, look, nothing makes sense to me. And the more that I learn about modern monetary theory and the standard system as it exists today, the less it makes sense. So I know it's not a problem that I don't have the capability to grasp the way people think the economy works. I feel like I can wrap my head around that. But really, over the last 10 or 12 years since I've been commentating, I've tried to forge a path forward and push forward with the ideas that make sense to me, and from an Austrian lens, in my opinion, just makes sense in general, right? Ron Paul said to me once, the free market always has a way of coming back and winning the day, no matter how long, no matter how long the bubble gets, no matter how high the booms or how low the busts. Eventually, we revert back to the basic supply and demand, prices of rationing mechanism, all these basic economic tenets. And so my question to you, as your father's son, right, who preached for what he believed was wrong with taxes, despite the consequences for him, and really sharpening my economic knowledge from listening to you and a lot of other Austrian school thinkers, and now myself kind of forging a path where I'm constantly trying to no longer make sense of things, but just continue to shine a light on what to me appears to be the right direction and the right way to look at things.
I mean,
my question to you is, like, sometimes that's a discouraging process where I feel like I'm almost sick of hearing myself talk, which I know you never feel that way, Peter, but is there honor lost in, like, continuing to try to advocate for that message, even if you really are only a broken clock that's right twice a day when the market decides?
I'm not right twice a day. I'm pretty much right all the time. When it comes to
proven right, proven right.
The markets, what's going to happen to the stock market when the bubble's going to pop? That's a different story. But I'm talking about, when you're talking about economics, right? The Austrian school is right all the time. I mean, you could look at all the areas of the economy where the government has intervened, and those are the areas that are so screwed up, right? Look at all the constant cries now. Oh, we have a healthcare crisis. Even the Democrats, we have a healthcare crisis, affordability crisis. Yes, that's not an accident. We have an accident because the government tried to make healthcare affordable, and they made it really expensive, right? If you want something to be affordable, then let the free market handle it, because that's what the free market does, right? That's what capitalism does. It promotes efficiencies in utilization of resources, and you have the pricing mechanism of the market, so that if there's a shortage of something and the price is high, the market will solve that by increasing the supply and moving resources away from someplace else where the prices might be lower and they can't make profit. So you have to let the market work. And when the Austrians, understand, like when they passed the Affordable Care Act, what did I say? I said, well, it's going to make healthcare more expensive than it is right now. I mean, it was obvious to somebody who understands it. Look, the same thing when Obama, the reason college is so expensive in America is because the government subsidizes it. Government guarantees loans. Now,
Right.
When Obama, when he was like, oh, I'm going to change this because he thought, oh, these banks are making a lot of money on these student loans that the government is guaranteeing, which was true, and the government should have stopped guaranteeing them. But what Obama did is, well, let's just have the government just loan the money directly to the students and cut out the middleman. And I just said, well, fine, that's just going to make college go up even more. That's going to make student debt explode even higher. You're not solving the problem. The problem with the high cost of education was the government involvement. Look, before the government got involved in student loans in the 1960s, college was not expensive. I mean, first of all, not that many people went, right? Because, I mean, if you had a high school diploma, that pretty much covered it for 90-something% of jobs. But the people that went to college, they didn't need to borrow any money. My dad, you mentioned my dad, he went to UConn, and his parents didn't have any money to send him to college. So he had a summer job waiting tables, and that's all he needed. He was able to cover his tuition, his room and board, just on the money he earned for a couple of months, in the Catskills, whatever, as a waiter, and he graduated college with no debt. Right, that was an old expression. Hey, what are you doing? I'm working my way through college. Nobody works their way through college. They work after they get out of college to try to pay off their debts, right?
Right.
Like if you look at the video I put up over 10 years ago in New Orleans, if you go to YouTube, Peter Schiff College, you see my New Orleans video where I'm going around talking to all the strippers and the bartenders and the bouncers and asking them where they went to college and what their degree is and how much money they still owe, right? You can see this, all of this nonsense. So the government screwed up healthcare. The government screwed up education. They screwed up housing, right? Everybody's talking about how housing is unaffordable. Yes. Why is that? The government, right? The government is involved in housing. The government subsidizes it, right? This is the irony, trying to resurrect Fannie Mae and Freddie Mac. They ought to kill them for good. The problem is they're in conservatorship. They should have went into bankruptcy. We don't want the government guaranteeing mortgages, subsidizing home buying, for the same reason we don't want them subsidizing college tuition. When the government is directing credit to colleges, they raise prices. So homes are expensive because there's too much credit in the housing market because the government is directing it there. But again, we're over-investing in home mortgages. Who's not getting a loan? What businessman is not getting a loan to build a factory because somebody got a government guaranteed loan to overpay for a McMansion? So right. what we need in housing, if we have we have an affordability problem in housing. Well, the solution is lower home prices. Obviously, prices are too high. Now, Trump's solution is, well, let's have 50-year mortgages. Well, that's a shitty solution, right? Or let's lower the credit scores, or let's get rid of the FICO requirement.
Right.
Here for people who don't really have that much money to overpay for houses. That is not the solution. That's trying to blow more air into a bubble. The solution is lower home prices, right? Just like the solution to education is lower tuitions. How do you get lower tuitions? Stop subsidizing kids for going to college, and that forces the colleges to cut costs. They have to respond to competition. If they want customers, right? Nobody can go to college if they couldn't get a loan. So would the colleges just close up and say, okay, we're all out of business? No, they would say, okay, we need to lower our prices. How can we get lean and mean? What can we do? Right? So they don't do that. And in housing, the main reason that the government doesn't want the simple solution to affordability, and that is lower prices, is because when home prices go down, people don't pay their mortgages because now they have no equity. So the housing bubble deflates, and now you have another financial crisis. Plus, there are a lot of Americans who have their net worth in their home equity. And if real estate prices come down so that they're affordable, they lose that home equity. So you have these two groups of people, the people who own homes and don't want the prices to come down, and the people who don't own homes and want to buy them. But they don't benefit from buying overpriced homes with cheap government money. And that's, this cockable. Now you've got all these hedge funds. You got Bill Ackman trying to say, we need, this is going to be great for the taxpayer, as if we can IPO or we can pump up the stocks of Fannie and Freddie. This is all nonsense. We need to get rid of these companies. We don't need to reward hedge funds who bought them on the cheap and now made friends with the Trump administration. And they want to con them into thinking, it's going to be a win for taxpayers because, look, they're going to own this Fannie and Freddie stock. So what? The stock's going to crash. They're not going to get any profits. They're just going to have some paper gain. But meanwhile, they're going to lose a fortune on all the bad loans that they're going to guarantee. Because the reason they don't want Fannie and Freddie to go public in a real IPO now is then the government would have to tell the truth. The government would have to say there's no government guarantee, which destroys the whole business model. Or they've got to say there is a government guarantee, which makes it explicit, not implicit, which is a bigger moral hazard than before. But now the Congress would have to approve that, which they're never going to do. So they come up with this BS. Let's just uplist them on the New York Stock Exchange and hope a bunch of institutions are dumb enough to buy it so that we can cash out. So the Austrians' economics explains everything. Look, nobody is talking about an affordability crisis in cell phones, in computers, in food, in clothing, right? Why is that? Why are those things affordable? Because the government's really not involved. Now, and to a small extent, they are involved in food because of the agriculture subsidies. And food would be cheaper if we didn't have these subsidies for farmers. But apart from that, the government stays out of most of the other industries. I mean, yeah, there's regulation.
Other than the baseline inflation that they create.
Yeah, but I'm saying that nobody is saying, gee, people can't afford cell phones. I mean, the first cell phone, right, that came out, well, first they were car phones. I remember, my mother had a car phone, and the car phone probably cost her $2,000 or $3,000 back then, which is a lot of money. And, but you only could use it when you were driving in your car. They finally came up with a portable one that you could take with you. And that's the one that, Gordon Gekko's got in the movie. He's down at the beach talking to Bud Fox, and he's got this, huge thing that he's holding on to. And those were thousands of dollars.
Yeah, they were like $5,000. Yeah.
And that's when that was a lot of money. That was like, well, I could buy a car or I could buy this phone, right? Now, all kinds of poor people have phones now.
Yeah.
I mean, people on welfare have
and they're 1,000 times better.
Oh, yeah. The government didn't have a program for that. The government didn't say, oh, gee, look at that rich guy with a cell phone. Everybody can't afford to have them. We have a crisis. Just really rich people can afford cell phones. We need a government program. We need to go out there and we need to guarantee loans so that the poor people can have these phones because it shouldn't be just the rich. So the government stayed out of it, and the free market made it so that everybody can have that, because that's how capitalism works. Capitalism lowers prices and increases quality. That's the beauty of it. And the people who do that get rich in the process. That's why it works. People said, that cell phone is really cool. I bet poorer people or middle-class people, I bet they would like to have one too. How can we make it cheaper? How can we improve it so that we can produce it at scale at a price that people can afford? And those people got rich figuring out how to improve everybody else's life, right? In a communist system where nobody has an incentive, then nobody does anything. So nobody benefits from anything. And so the government stayed out of it. So the Austrians, our explanation, understanding capitalism and free markets, but all the booms and busts. I mean, why did I know that, we had a housing bubble and that was going to burst, or the dot-com bubble, or all? I mean, I understand how the credit cycle works from that perspective. I understand money. I understand inflation. I understand the unintended consequences of government action. Now, the thing is, even though I know what's ultimately going to happen when the government interferes and screws things up, right? Because artificially low interest rates screw things up, right? They misallocate capital. We don't have enough savings. There's too much borrowing, and the government misdirects resources. It takes it away from where it should be and directs it to where it wants it to be, as opposed to allowing the free market to efficiently allocate these scarce resources and credit. You have the government tilting the field to favor.
Or in the case of interest rates, would be determined by the supply of money that people have saved and the demand that people want to borrow.
But you get all kinds of mistakes, and those mistakes are ultimately revealed as mistakes, and they have to be corrected. But the timing is very difficult. So it's very difficult for me if I see that something is wrong. It'd be like, there's a dam, and I can tell that the foundation or things are being compromised structurally with the integrity. And I'm like, this dam is gonna break, right? But it could go for years before it breaks. And I just look, I can't tell you exactly when, but I'm looking at the fundamentals, and I know that eventually, but it could, people could be like, oh, Schiff, what are you doing? Talking about everything is fine. And then all of a sudden, there's a disaster. And then, of course, they say, well, Schiff is just a broken clock. He's been saying this dam was going to break for years. Yeah, I know. I knew it was going to break eventually, because I could see there was a structural problem. I just can't figure out exactly when the forces of gravity or whatever are going to be to the point where it gives. But I knew that it was going to happen. And so when you see what the government does with monetary policy and fiscal policy, and you know that mistakes are being made, you know it's going to blow up. But because the process can go on for a long time, while I'm warning about it, people, don't listen to me. And that's particularly so in Bitcoin. I looked at Bitcoin, right? I knew exactly what it was the moment I saw it. And I haven't changed my opinion, even though I've known about it since the beginning. Yes, had I anticipated this gigantic bubble, I could have gotten rich just like other people did. I probably could have been the richest because at the time I first knew about it, I probably had a lot more money than a lot of other people back then. And, I was a libertarian. It was at the beginning, it was just, anarcho-capitalists and hardcore libertarians that were buying some Bitcoin, right? When I was thinking about throwing in 5-10 grand, I was going to get I would have got a lot of Bitcoin, by today's token. But because I've been pointing out that it's not real gold, that it's a pyramid, it's a Ponzi, that it's going to collapse, because the pyramid has been built so big over the years, that alone has discredited what I'm saying for a lot of people, because they say, what the hell do you know, right? You were telling me this at 1,000. You were saying it at 10,000. You obviously don't know what you're talking about because it's 100,000. So who cares what you say, right? Because I'm rich because I bought it and it went up. Right. And the fact that so many people made so much money, it really creates an arrogance that means they're right? And there's that old expression.
That's for sure.
You don't want to confuse brains with a bull market, and that is especially true in a bubble. But ultimately, right? If Bitcoin does end up collapsing, and everybody loses almost all their money, right? That doesn't mean that I was wrong. Now, it does mean that I missed out on an opportunity to profit from the insanity. I could have been one of the few people who made money in Bitcoin. But 90 something percent of the people are going to lose money in Bitcoin. That's going to be the reality. And the fact that I knew it, so early, that's what, I'm watching on the major networks now, and they're talking about Bitcoin. And these guys have been totally bought and paid for by their advertisers and, that are in there. So they think it's legitimate investment. They don't get what it is. And they're trying to figure out why it's going down. Like, what's happening here? Like, Bitcoin is down. Of course, it's nothing. I mean, the question is, why the hell did it go up? That's what they should be asking themselves, not why is it going down? Like, what took it so long to go down? Like, it never should have gone up. The question should be, why is Bitcoin still 84,000? Why is somebody dumb enough to pay $84,000 for Bitcoin? That's the question they should be asking. Not, why did it come down from 125,000 to 84,000? Why was it at 125,000 to begin with? But they still don't get what this is. But I saw it from a mile away. That's my problem. I recognized it too soon, right? I outsmarted myself out of billions of dollars.
That might be the second best. That might be the second best Peter quote in this interview, with the first one being, "I'm not a broken clock that's right. I'm not right twice a day. I'm right all the time."
Yeah, not about no one's right all the time on investments. I mean, I got my share of losing investments. I got my share, but when it comes to economics, I'm right. Right. I understand economics, and when I'm making economic forecasts, I know what I'm talking about. I'm not a weatherman in that respect.
Right.
The joke, they invented economists to make weathermen look good. That's because these economists are Keynesians. They don't know what the hell they're talking about. That's why they're making them look good. But
you're either right, and I'm the second smartest person in the world for fucking being a Peter Schiff disciple, or you're wrong, and we're the two biggest dumbasses in history. Just so you know.
Yeah, but I was going to say something, and then I forgot because you got me out on a tangent with the stuff that I'm always right.
That's all right. Let me ask you.
What was I just saying? I was just because there was something I was going to say.
Oh Christ, who knows?
Oh yeah, that. The vast majority of people, 90-something% of people, are going to lose money in this thing. They're going to be the bag holders. And it's not just going to be a zero-sum game, because a lot of people rake this along the way. Like, a lot of commissions were paid to miners and exchanges and Wall Street. So the losses are going to exceed the gains as far as owners are concerned. And, when this Bitcoin bubble pops, and I think the crypto bubble, it's not just Bitcoin, it's crypto, right? The crypto bubble is bigger than the dot-com bubble. And so I think the consequences of it popping for the economy are bigger, because of the loss of paper wealth and because of the loss of jobs, and loss of capital. So it's going to be a negative. There could be some systemic risk. There could be some defaults on loans from the industry. Now, of course, the crypto industry collapsing isn't the problem. That's the solution. The problem is that we erected the industry in the first place. That was the problem. That was a mistake. The bankruptcy of that industry and the freeing up of those resources, that's the market's fixing the problem. We have a lot of really smart people wasting their smarts in crypto. They need to be doing something productive, right? Free them up, right? We got to get rid of all these crypto jobs so that people doing them have the time to do something else that might actually benefit us. I mean, society isn't benefiting from fart coin or any of these coins, even Bitcoin. I mean, what the hell do we have? What
and even more worrisome, to be honest with you, is the idea that, first off, I just looked up real quick. So the entire cryptocurrency market cap plus all of the crypto companies is about $3.5 trillion, and the dot-com bubble burst was about $5 trillion. Just so we know for the record the size, it's almost the same size. But it's not bigger.
What do you count? You're counting all the cryptos.
I'm counting all of the market cap for public companies in the blockchain and cryptocurrency and crypto mining categories.
Yeah, but you're probably
plus the total cryptocurrency market cap of all cryptos. So
right.
$3.5 trillion.
What you're excluding are the non-publicly traded crypto businesses that exist.
Yeah, but okay. So even if they're another $225 billion, which they're not, it's still $4 trillion.
There could be
Let me make that point.
But
my bigger point is, like, more worrisome than that is the idea that we're intertwining stable coins and crypto into the fabric of the U.S. Economic system. So this idea that stable coins are, which, by the way, some of which are not audited, are essentially opaque black holes, but that these stable coins are going to be, the buyer of last resort for U.S. treasuries, and that we're just going to kind of weave them into the U.S. economic system I think is extraordinarily frightening.
Yeah, well, I think it's more a bunch of self-serving hype. I don't think that there's as much demand for stable coins. I think that the main demand now comes from crypto traders, and they use stable coins to trade in and out of Bitcoin if they want to go to a cash position. I don't see a lot of demand to use stable coins instead of, a MasterCard or Visa or PayPal or Venmo or Zelle or any of these other ways that we have to transfer dollars around. I don't, they make an argument that, well, what about people living, Mozambique, people in Africa that don't have, they want stable coins, assuming they have a phone or something. They might want them, but I mean, how much is that? I mean, of course, if I were them, I'd rather have a stable coin backed by gold than dollars. I mean, what's so special about the dollar? I mean, the big problem with stable coins is you don't get any interest. I mean, think about this. I got my money in a money market now, my cash, and I earned 4%. Why am I going to put that in a stable coin and earn nothing?
Right.
What's the purpose? Because what the stable coin company does is they take your money and they buy the treasury bills, the money, and they earn it. Well, that's their whole business model that they're going to earn. Although now, if you look at what Tether is doing, right, the biggest issuer, they're buying gold. They're buying mining stocks.
Right.
They're not even buying. So they're getting out of treasuries too. But so at most, the demand for treasuries would shift from banks to stable coins, right? Or money market. It's not going to create all this new demand. Like all of a sudden, all this money that's just dying to get into stable coins that wasn't in the banking system, right? We would have to get more money. We would have to convince people that own euros, right? Or that own, pounds to own US dollar stablecoins to get new demand for treasuries, right? And I don't think if someone's living in Europe, chances are if they're going to get a stable coin, it's going to be in euros because that's what all the prices are at. Is that me or you?
That's you.
Yeah, that's my mom calling me. I'll call her back. So what was I saying? Yeah, so I think it's all, again, the government is trying to hype up this industry. Look, some other, they got the Loomis bill for the strategic reserve. Some other congressman just the other week said that he wants to let people pay their taxes in Bitcoin. But then when the government gets the Bitcoin, it puts it into the strategic reserve, right? As if somehow this means it doesn't cost the government any money. Of course it would. It would mean that the money it would have got in tax revenue, it's got to stick into the stupid reserve. Some people that are mad at the government, what they might do is buy Bitcoin and then send the Bitcoin in because the government wouldn't have access to the money anymore. They'd have to, because it's like a huge, anybody who pays their taxes in Bitcoin, the government doesn't have the money anymore. So now the deficits are going to be much bigger because instead of collecting tax revenue, they filled up the Bitcoin reserve. So now they got to print more money because they have to borrow more money, and it means there's more inflation. But of course, this bill's got no chance of getting out of Congress. I mean, there's not enough congressmen dumb enough to bite on it. But the Bitcoin community, they pay off a few of these congressmen, and then they advocate for this nonsense. But it's the government that's now pushing this, and that's part of the problem, right? I mean, I've got no problem. Look, I believe in the free market. I believe in capitalism. And in free market capitalism, people make mistakes. And they live with the consequences of their mistakes. And because people live with the consequences of their mistakes, they make fewer mistakes. And the mistakes don't get so big. Where you have huge mistakes is where the government steps in and takes away the consequences, right? With guarantees or subsidies. So then the mistakes become huge. And then when they blow up, it's catastrophic, right? That's all government. Capitalism doesn't do any of that stuff. But capitalism always gets the blame when it happens.
Right, that's for sure.
And then what is the government solution to these government problems that they blame on capitalism?
Socialism.
More government. Too much
Right.
capitalism. You see, look what these greedy businessmen did. I used to talk, George Bush said, Wall Street got drunk. That's the problem. Wall Street got drunk, right? That's why we had a housing bubble, because Wall Street got drunk. And I was saying, yeah, they were drunk. Who was the bartender? Who liquored them up? That was the Fed. That was Alan Greenspan. Blame him. He's the one that what do you expect when you do that, right? So the government does all this stuff. Capitalism is the solution to our problems. It's not the source of our problems. But the government is very good at scapegoating and blaming. And the public, by and large, is ignorant. That's why they vote for a guy like Maldami in New York. They don't know any better. I mean, they were indoctrinated in government schools by socialist government teachers. Even when I went to Berkeley in the 80s, as a freshman, I went to college. I went to a poli-sci, my first poli-sci 1, right? Freshman year. Big, thousands of people in this lecture hall. And I listened to the teacher saying all this bad stuff about America and the founding fathers and criticizing everything. So I went to her office hours and I said, "Hey, Mrs. So-and-so, my name is Peter Schiff. I'm in your poli-sci 1 class." I said, "I just got to ask you a question." "Yes." I said, "Are you a communist?" And she said, No, I'm a Marxist." I said, "All right." Mm-hmm. I dropped the class. But I mean, the problem is the rest of the students they're being
Marxist. Okay.
But the problem is the kids don't know that they're being taught by a Marxist, by a communist who's teaching them about America from the perspective of a communist. So what do you expect? I mean, what do these kids see? I knew enough because my father had taught me about economics. And so when I hear all this nonsense, I know a communist and a Marxism. Of course, she doesn't even realize that she's a Marxist. She's a communist. What does she think communism is? It was invented by Karl Marx. But it's like to say, "Oh, no, I have perished the thought. I'm not a communist. I'm a Marxist." Okay.
Yeah. I'm not a socialist. I'm a democratic socialist.
But so that's why, we have the election results that we do, and the public is willing to accept all the nonsense that the government tells them. And so that's why I'm afraid, this next crisis that's coming is going to be way bigger than 2008. I've been talking about that for a long time, and it doesn't mean I'm a broken clock when it finally happens. But I am hoping that I can be somewhat influential, maybe, in preventing the mistakes again. I mean, I really wasn't influential at all last time. In fact, I remember when they had the hearings in Congress in like 2010, and they were trying to figure out why we had the financial crisis, and I was trying to get invited to testify because I was like, hey, I predicted it. Just I'll tell you why, right? I mean, I wrote a book forecasting it. I've been predicting it for years. Yeah, I'll explain it to you. They wouldn't let me testify. Instead, everyone who testified were people who did not predict it. In fact, people who said it couldn't happen. Those were the ones that were there to explain why it happened. And it wasn't an accident that they blamed it all on not enough regulation, even though it was the regulation that caused it. And so that's why we ended up with more regulation, because they put a bunch of people on the committee who didn't know what they were talking about by design. But, I did manage to get to Congress twice. I don't know if you know that. I testified twice.
I know. I watched both videos. I saw you. They're on your YouTube channel.
Yeah, Peter Schiff.
They're fucking hilarious. It's like you and 9 people that have no idea what the fuck's going on.
It's Mr. Schiff goes to Washington, and then Mr. Schiff returns. But one of the funny things about the testimony, you can see me, you go and look at it, and let's say there's, 5 or 6 of us, right? Everybody's got a big stack of papers, right, in front of them. Everybody's got all these notes and all this stuff that they want to refer to. I got nothing. I'm just there, just to talk about. I didn't bring all that stuff with me, and so I'm just sitting there. There's just an empty desk in front of me. But they're funny. They're funny if you watch them. And the guy that invited me the second time got fired. I felt bad for the guy. They were like, I mean, he was an intern, so it's not like he lost a paying job. And I've never been invited back, right? They probably said, how the hell we let this guy in here? It's like, but yeah. So, but they're entertaining. But I would have loved to testify back in about the financial crisis, because we
gotta get you back on fucking CNBC first, and then then we'll get you to testify.
Look, I'd burn that bridge. I mean, first of all, on purpose, because I'm really pissed. I don't like their one-sided Bitcoin coverage. In fact, I think they're going to get themselves sued, personally. I think a lot of people are going to lose money in Bitcoin, and they're going to sue CNBC. And they probably deserve to get sued, because they go out of their way to keep off Bitcoin bears, and they promote this thing. They pump it. They hype it up. And I bet if you got into Discovery and you got all their emails and their text messages, I bet you will find a lot of evidence that shows that there was some pressure from the advertisers for them to have positive coverage of Bitcoin as a quid pro quo to the advertising dollars continuing to flow to the network, and keeping off people like me. For all I know, they made a deal not to have me on because the advertisers, the crypto industry, didn't want me on, shitting all over their their Bitcoin. So I've been very critical of the network for that reason. And so I don't know that they would want me on. And at this point, it's like, why do you want to join a club that doesn't want you? Right. So when I first started going on CNBC back in 2004, it's my first time. I kind of needed CNBC and CNN and Fox and MSNBC because nobody knew who I was. I mean, I was writing stuff on the internet, so some people read my commentaries, but I appreciated the platform that they were able to give me. And they certainly gave me a lot of material. When someone made that Peter Schiff was right, all the material came from those appearances. That's what made it good. So yeah, at that point, I really needed to go on. I don't really need it anymore. I mean, I still go on, okay, not those, but I do go on, but not nearly as often as I used to. But I have my own platforms, right? I have my YouTube channel. I have, Schiff Radio. I have my social media. I have my X account. And I'm able to bypass those gatekeepers and have a following, have an audience, and speak directly. I think I would have a much bigger audience if YouTube hadn't been shadow banning me all these years, and more people had been, recommended.
Well, it wasn't just you.
Yeah, no, it was a lot of people. I'm not the only one, right? But yeah,
just you. Well, I'll tell you what. I'll make the same promise about Saylor and the Saylor debate to CNBC. Instant $10,000 donation to St. Jude's Children's Hospital if CNBC has you on for a segment that lasts more than 2 minutes. That's my offer. Instant 10,000. I write the check publicly and fucking send it in. Same with if Saylor chooses to debate you. 10,000 St. Jude's instantly. And then the last question. Hang on. The last question I want to ask you is, I'm friendly with Bill Ackman. I like Bill Ackman. I think he's a good dude. I know everybody has varying opinions on him, but I've been friendly with him for years. Would you debate him on the Fannie Freddie stuff that you were just talking about?
I'm going to do a Spaces on, just because he did one. I already said I'm doing one on Monday to say they should be shut down.
Okay.
But I would debate him on Fannie and Freddie.
Okay.
And I got a lot of friends that own hundreds of millions of dollars of that stock. They get mad when Peter, what are you doing? You say to tell I said, look, I never advocate for the government to make bad policy, even though I'm going to profit from it. Look, I own all these gold stocks, right? That profit from cheap money and rate cuts and inflation. Yet, what do I advocate for? I say the Fed should hike rates. I'm saying that what the Fed should do that's going to harm my investments, right? So I don't advocate for bad policy, even though I'm investing to profit, right? So if I had a big investment in Fannie and Freddie, I would still be criticizing what Ackman wants to do, even though I say, look, the government's going to be dumb enough to do this, so I'll try to make some money off of it, right? But I'm never going to advocate that the government do something bad just because I'll profit from it. Right? I'm willing to profit from what the government does that's bad, so long as I do everything that I can to stop them from doing it. Right? Then I'm not going to feel bad. Right? I mean, like I was short the subprime market, right? But I wasn't advocating for the policies. I was criticizing all the policies that made that work. Right? At the time that they were working. But I wanted to say something, and then I just went off on a tangent. So what were you saying? Because what was I saying?
I was saying that if Michael Saylor debates you, or if CNBC has you on for more than 2 minutes, which if anybody can do it, if anybody can do it, it's my buddy.
So I remember, don't forget. So when I used to go on CNBC and talk about gold, right? They gave me so much shit for recommending gold, right?
I know.
And all they did was say, well, Peter Schiff, you said buy gold and it's down. The first time I was on was with Mark Haynes. And I went on and gold was about $400 an ounce. And then I came on again, how many months later, and it was like $450 an ounce. And I'm like, hey, Mark, gold's up $50 since the last time I was in your studio, right? And he's like, who cares? Why should I care about the price of gold? I don't care. And this is a financial network. And he's saying, and I'm like, well, you should care. It's an important thing. Alan Greenspan at the time said that he set monetary policy based on the price of gold. Yet Mark Haynes didn't care about it. But every time I went up, they accused me of being a shill. They would say, Peter, you're only coming on our air telling people to buy gold because you're a gold salesman, right? You're trying to, and back then I didn't even sell gold. I didn't even start Schiff Gold until 2011. So I didn't even have a gold business. I was just telling people to buy gold because I thought they should own it. I was making nothing. I eventually started Schiff Gold because a lot of people that I was telling to buy gold were getting ripped off. They were getting overcharged. And so I'm not going to let this happen. So I'm going to start my own company to make sure that the people I tell to buy gold, put the money into gold, not into some pocket of some salesman that gets them to buy some fake numismatic coin, at a 50% markup, whatever they were doing. But they would kill me. They accused me all the time. I was not sincere. I was just trying to get the price of gold to go up, even though I had no influence on the price of gold. I'm just one little guy, and gold market is huge. But now, and for years, all these people come up on their air who are in the crypto industry.
Yep.
Like, really, they're all in. Their whole livelihood depends on crypto prices going up and Bitcoin price. And they come on there and they say, well, where do you think Bitcoin is going? Well, it's going to be 250,000 at the end of the year. Okay, thank you for your unbiased, independent forecast, right? Nobody ever says, oh, come on. I mean,
Right.
do you really believe that? You're just saying that because you're trying to get people to buy Bitcoin, right? That's your whole, nobody questions the integrity of the Bitcoin promoters, the way they question my integrity when I was telling people to buy gold,
Right.
which is a legitimate thing to do. This is all a pyramid. They actually can. The people that come on CNBC actually have the power to influence the price of Bitcoin because the market is much thinner and it's much more susceptible to that kind of stuff, right? I had no power whatsoever. It didn't matter what I said about gold. The market is huge. Even if every CNBC viewer just went and bought gold, the minute they saw me, it wouldn't even affect the price. But if they all rushed in a token, it'd be like, so yeah, there's something going on behind the scenes why the crypto industry gets a pass like that. And nobody.
Yeah, I would say it's more than a pass when you have Tom Lee on 5 days a week. I don't know what's going on, but
all these guys. I mean, and look, the crypto prices are up on the ticker all the time. They sponsor segments. This is the Bitcoin moment. At one point I said that CNBC should just, stands for Crypto News Bitcoin. That's what it stands for. Because that's all they do is talk about it. And they have these guests that come on. It doesn't matter what your business. Let's say they have the CEO of Procter and Gamble comes on the show and they'll say, so what's your Bitcoin strategy? It's like what? I'll have a Bitcoin, but they don't want to say what kind of asinine question is that? They say, well, they still kind of respectfully try to say something, but it's like, why does everybody have to be asked about Bitcoin?
Right.
But they're just trying to keep the topic alive. They're, for what reason? It's obvious because they've got to be their number one advertiser. It's got to be just like the number one donors to the election cycle last year was crypto. And probably
Right.
more than the insurance industries, more than the lawyers, the trial lawyers, the unions. I mean, they obviously want something from government, right? That's why people donate like that. It's because they want something. They're buying something. They're not just. And the reason the crypto industry needs the government. They're running out of fools. They need the state to intervene and bail them out. I mean, that's the irony. It's all a big government Bitcoin bailout. I mean, that's what the strategic reserve is all about. It's not a strategic reserve. It's a Bitcoin bailout fund. That's why they need it. They want the taxpayers to bail them out of Bitcoin and buy it up. And so again, that's just another sign that we're reaching the end of this. That they're having to rely on government. Ironically, right? The savior of Bitcoin is government and Wall Street, right? Bitcoin was supposed to be the antithesis. Well, the early guys, we want nothing to do with government. We want self-custody. Now it's all about trying to get Wall Street, more Wall Street money, more corporate money, more government money, right? Because they need that to try to get the price to go up. Because that's what it's about now. It's not about sovereignty and privacy, and it's about making money, right?
Yeah. Listen, Peter, thank you very much for giving me an hour and 40 minutes of your time on a Saturday.
I know my mom called. The problem means my dinner's ready. I still sometimes get. I'm 62, and my mom still makes dinner for me someday. 84. She has a.
I got two favors I want to ask from you. One is, can you keep the browser window open after we end the recording so that the video uploads?
Oh, whoa! How long do I got to leave it on?
Just leave it open for like 10 or 20 minutes after we're done. That's number one.
10 or 20 minutes, but do I have to leave the camera? I have to leave the camera on and everything?
No. You just got to leave the browser window open. You just leave your computer like where it is. Everything else will turn off.
Okay, I'll just plug it in so the battery doesn't die, and I hit stop.
I'll hit stop in a second. I'll end the video. Just do nothing. Just leave the fucking computer where it is. I'm not going to keep the camera on or anything.
I'm going to go eat dinner.
That's favor number one. Favor number two. Can you please show everybody your shorts before you leave?
I'm not showing people my bathing suit.
Come on.
Why,
Come
why,
on.
why did you like him so much? I got,
I love him. I love him. I just think it's hilarious that you're always giving people shit
I
about
know,
how they're dressed.
I know, but I don't want to stoop that low.
Well, I took a fucking screenshot before when you were walking in, and I will hold that as ransom now for the future if I need future interviews. If you don't want to show people,
Right? Oh my short stare.
All right, Schiff, you're all right, brother. Go enjoy your dinner. Thank you so much, man. You know I appreciate you, right?
All right. Take care.
All right, take care, Peter.